And HDFC Bank, well, they delivered a steady set of numbers. The standalone net interest income, profits as well, they meet estimates. In fact, let's listen in to what HDFC Bank CFO Srinivasan Vaidyanathan had to say about the quarter gone by in their conference call.
HDFC Limited, as you all know, excelled in nurturing trust in their customer engagement over 4 decades of operation. Home loan product, which is a very emotional product, we would like to harness this bond with the home loan customers by leveraging our exhaustive distribution reach, comprehensive digital platform to upsell complete bouquet of banks products and subsidiaries products to all these customers. Wholesale grew 12%, and banks advances growth of IBPC grew by 20%. When we include HDFC's individual home loan book, the pro forma core loan growth for the merged entities at 18.7% year on year. We continue to focus on our technology investments in addition to distribution network expansion. Balance sheet remains resilient. LCR for the quarter was at 126%. In the medium to long term, distribution and reach is the key. This is what will provide funding through better engagement. Cost to income ratio for the quarter was at 42.8%, reflecting the cost of investments, which from a timing point of view has been chosen during benign credit environment to capture the market opportunity. This will moderate and revert to below previous levels after the break-even and payback starts from these investments flow through. The slippage ratio for the current quarter was 35 basis points. Slippage ratio, excluding agriculture, because as I said, agriculture is seasonal, was at 26 basis points for the quarter. On the provisions, we recorded provisions of 2,850 crores against 3,200 crores in prior year. The provision coverage ratio was 75%.
Well, in fact, Bernstein has given an outperform rating for the stock with a target price of around 2,300. Pranav Gundlapalle, the senior research analyst at Sanford, Bernstein, joins us on the show. Hi, Pranav. Good morning. Thanks so much for joining in. Well, give us your quick analysis of the numbers. They look quite good. The street likes it as well. What are the key triggers you're looking at from here on?
Good morning, Prashant. Thanks for being on the show. So I think it was a positive set of numbers. Firstly, the NII growth at 21% was a key positive because it lays to rest a lot of controversy that had started off last week with the Q1 headline update that came in. There were many combinations and combinations of growth numbers, depending on what you include and exclude. But with NII at 21% growth, I think that lays to rest a lot of discussions on the growth numbers. The other positive related to the NII was the flat NIM. I think a flat NIM in the current context where there's a Q1Q NIM pressure across the board, I think that, again, turns out as a key positive. And from the earnings call last night, I think the big positive was guidance towards no big one-offs because the merger, that's to be expected next quarter. So I think that should also ease a lot of concerns that people had on the merger-related impact coming in the next quarter.
Okay. So do you see these growth rates as something that is sustainable through the course of FY24? What are you penciling in? And on the stock price as well, what would the risk reward look like now for a long-term investor?
Okay. I think the growth rates should be closer to the 18% mark, especially once you include the mortgage business in. I think the retail mortgages plus HDFC Bank standalone should be at about 18% mark. That's our expectation. And in terms of the risk reward, I think there's definitely skewed favorably because there should be a re-rating once the merger overhang lifts, right? I think two things happen. One, all the uncertainty around what the combined entity's profitability and growth would be, I think that eases in the next couple of quarters. So that is one. And secondly, I think on a relative basis, what's happened in the last 12 to 18 months is that many peers as well as smaller banks have shown similar numbers, if not better numbers than what an HDFC has managed to deliver. I think that will start to ease or change once the easy comps start to go away, right? So 3Q was really the point where the returns started improving for a lot of the banks. So come third quarter, the year-on-year numbers will start to look a lot more ordinary and where HDFC will again kind of stand out. So I think these two factors should drive a good re-rating from here. So we're obviously quite bullish on the stock at this stage.
Okay, very quickly, you're bullish on HDFC Bank. ICICI Bank comes out with numbers on Saturday. Any quick thoughts on what to expect?
I would say that the NIM decline should be marginal, nothing steep. And therefore, a slight NIM decline combined with OPEX coming back quite strongly will mean that you will have muted ROA improvements or maybe a slight ROA decline Q-on-Q basis, but still very healthy on a year-on-year basis. So you should still see a very healthy EPS growth on a year-on-year basis for ICICI as well.
All right, Pranav, last couple of questions before we let you go. What about the PSU banking names? What's your view out there? Some of them have seen a big rally. In the middle, they had a bit of a lull. But view from here on, and what's your pecking order?
I think there's still a few quarters of operating performance for PSU banks almost matching that of the private sector banks. They are sitting with excess liquidity, and until that gets used up, you will see growth numbers almost matching that of private sector banks. But beyond that, I think the key concern there is the deposit growth remains quite weak for the PSUs compared to the PVBs, which is what will become the constraint for their growth going forward. Some room left for rally there, and SBI is clearly a top pick there. I think there is some overhang due to idiosyncratic factors, and that going away should mean that the premium was at least the other PSU banks should emerge meaningfully. So SBI would be a top pick amongst the PSU names.
Okay, all right. Pranav, thanks a lot for stopping by and in fact giving us your view on the banking space. Wishing you a good day ahead as well. Well.